Welcome back. Today we will be covering Chapter 9 International Trade, in which we will cover Unit 4 Exchange Rates and Net Economic Effects. So, in this unit, we will cover exchange rates and in its economic effects, which has the exchange rate regimes, change in exchange rates, and devaluation versus depreciation. So, here is a quick introduction. Each day, we get fascinating news about the currency which fueled our curiosity, such as rupee gains 12 paisa against US dollars. Dollar spot or forward rates plumped, rupee down, euro holds steady, pound strengthens, etc. Ever wonder what this jargon means? We will try to understand a few fundamentals related to currency transaction in this unit. In chapter 3, we examined the demand for and supply of domestic currency. It is not domestic currency alone that we needed. Households, businesses, and governments in India, for example, buy different types of goods and services produced in other countries. Similarly, resident of the rest of the world buys goods and services from residents in India, that is export. Foreign investors, businesses, and governments invest in our country just as our national invest in other countries. In the same way, lending and borrowing also takes place internationally. These and similar other transactions give rise to an international dimension of money, which involves exchange of one currency for another. Obviously, this entitles market transactions involving the determination of price of one currency in terms of another. The exchange rate. A foreign currency transaction is a transaction which is denominated in or requires settlement in a foreign currency, including transaction arising when the enterprise either buys or sells goods or services whose price is denominated in foreign currency. It borrows or lends funds when the amount payable or receivable are denominated in foreign currency. पहला मतलब यूएस डॉलर हो गया आईफोन 1000 यूएसडी. Similarly, इधर कुछ लोन है बोरोइंग है. Third, becomes a part to underperform foreign exchange contract or otherwise acquires or disposes of asset or incurs or settle liabilities denominated in foreign currency. So foreign currency यानी yen, dollar, euro, etc. Then we have the exchange rate regimes. Exchange rates are determined by demand and supply, but government can influence those exchange rate in various ways. The extent and nature of government involved in currency market defines alternate system of exchange rates. In this section, we will examine some common systems and explore some of the macroeconomic implications. There are three broad categories of exchange rate systems. In first case, exchange rates are set purely by private market forces where no government involvement. मतलब government का कुछ लेना देना नहीं है. Values change constantly as the demand for and supply of currency fluctuate. In other system, currency values are allowed to change, but government participate in currency market in an effort to influence those values. Finally, government may seek to fix the values of the currencies either through participation in the market or through regulatory policies. कुछ policy change करा के भी कर सकते हैं. An exchange rate regime is the system by which country manages its currency and with respect to foreign currency. It refers to a method by which the value of the domestic currency in terms of foreign currency is determined. There are two major types of exchange rate regimes at the extreme ends. Firstly, the floating exchange rate regime, also known as flexible exchange rate, and fixed exchange rate regime. अब दोनों को थोड़ा ब्रॉडली देखते हैं. इन फिक्स्ड फ्लोटिंग रेट एक्सचेंज सिस्टम, फ्लोटिंग मतलब चेंज हो रहा है और फिक्स बोल तो फिक्स रेट है. गवर्नमेंट एंड सेंट्रल बैंक्स do not participate in the market for foreign exchange. Their relationship between government and central banks on the one hand and currency market on the other is much as same as typical relationship between this institution and stock market. Government may regulate market to prevent fraud, but stock value themselves are left to float. मतलब कुछ जगह ये कर सकता है पर प्राइमरली बायर सेलर पे डिपेंडेंट है. A free floating system has the advantage of being self-regulated. There is no need for a government intervention if the exchange is left to the market. Market forces also restrain large swing in demand or supply. Suppose, for example, there is a dramatic shift in world preference led to a sharply increase in demand for goods and services produced in Canada. This will increase the demand for Canadian dollars, raises Canadian exchange rate, and make Canadian goods and services more expensive for foreigners to buy. Some of the impact of the swing in foreign demand would thus be absorbed in rising exchange rates. In effect, a free floating exchange rate acts as a buffer to insulate an economy from the impact of international events. The primary difficulty with free floating exchange rate lies in its unpredictability. Contracts between buyer and seller in different countries must not only reckon with possible changes in prices and other factors during the life of those contracts, they must also consider the possibility of exchange rate changes. An agreement by an Indian distributor to purchase a certain quantity of US dollar goods each year, for example, will be affected by the possibility that the exchange rate between Indian rupee and the US dollar will change while the contract is in effect. Fluctuating exchange rate makes international transactions riskier and increases the cost of doing business with other countries. Managed float system. Governments and central banks often seek to increase or decrease their exchange rate by buying or selling their own currency. Exchange rate are still free to float, but government try to influence their values. Government or central bank participation in the floating exchange rate is also called as managed float. Countries that have a floating exchange rate system intervene from time to time in the currency market in an effort to raise or lower price of their own currency. Typically, the purpose of such intervention is to prevent sudden large swing in the value of nation's currency. Such intervention is likely to have only small impact, if any, on the exchange rates. Still, governments or central banks can sometimes influence their exchange rates. Suppose the price of a country's currency is rising very rapidly. The country's government or central bank might seek to hold off further increase in order to prevent a major reduction in the net export. So, an announcement that a further increase in its exchange rate is unacceptable, followed by sales of that country's currency by the central bank in order to bring its exchange rate down, can sometimes convince other participants in the currency market that the exchange rate will not further rise. That change in expectation could reduce demand for and increase the supply of currency, thus achieving the goal of holding the exchange rate down. In a fixed exchange rate system, the exchange rate between two countries is set by government policies. There are several mechanisms through which fixed exchange rates may be maintained. Whatever the system of maintaining these rates, however, all fixed exchange rate systems have some important features. So, in an open economy, the main advantage of a fixed rate regime are a fixed exchange rate avoids currency fluctuation and eliminate exchange rate risk and transaction cost that can impede international flow of transaction and investment. International trade and investments are less risky under fixed tax rate regime as profits are not affected by the exchange rate fluctuations. A fixed exchange rate can thus greatly enhance international trade and investment. A reduction in speculations on exchange rate movements if everyone believes that exchange rate will not change. A fixed exchange rate system imposes discipline on a country's monetary authority and therefore is more likely to generate low level of inflation. Inflation का impact lower रहता है. The government can encourage greater trade and investment as stability encourage investment. So ज़्यादा स्टेबल रहेगा करेंसी तो डिसीजन लेने में आसान रहेगा, तो ज़्यादा पार्टिसिपेट के लिए इनकरेजमेंट करता है गवर्नमेंट. Exchange rate peg can also enhance the credibility of the country's monetary policy. However, in the fixed or managed floating exchange rate regime, where the market forces are allowed to determine the exchange rate within the band, the central bank is required to stand ready to intervene in the foreign market and also to maintain an adequate amount of foreign exchange reserve for this purpose. Adequate amount of foreign reserve, डॉलर्स रहने दो, पाउंड रहने दो, मोस्टली डॉलर बेस्ड इकोनॉमी चलता है इंडिया में. बाकी कंट्रीज का करेंसी भी है. Basically, the free floating the or flexible exchange rate regime is argued to be efficient and highly transparent, as the exchange rate is free to fluctuate in response to a supply of and demand of for foreign exchange in the market, and clears the imbalance in the foreign exchange market without any control of the central bank of the monetary policy. A floating exchange rate has many advantages. A floating exchange rate has the greatest advantage of allowing central bank or government to pursue its own independent monetary policy. Floating exchange rate regimes allows exchange rate to be used as a policy tool. For example, policymakers can adjust their nominal exchange rate to influence the competitiveness of the tradable goods sector. As there is no obligation or necessity to intervene in the currency market, the central bank is not required to maintain huge foreign exchange reserve. However, the greatest disadvantage of the flexible exchange rate regime is that volatile exchange rate generates a lot of uncertainty in relation to the international relation. बहुत volatile होता है प्राइस, कभी ऊपर जा रहा है, कभी नीचे जा रहा है, कभी ऊपर जा रहा है, कभी नीचे जा रहा है, तो ये अनसर्टेनिटी रहता है कभी भी. In short, a fixed rate brings more currency and monetary stability, credibility, but it's lack flexibility. On the other hand, फ्लोटिंग रेट हैज़ ग्रेटर पॉलिसी फ्लेक्सिबिलिटी बट लेस स्टेबिलिटी. एक स्टेबल है, दूसरा नहीं है. एक करेंसी ज़्यादा लाता है, दूसरा कम. फिर आते हैं वन ऑफ द मोस्ट इंटरेस्टिंग पार्ट, नॉमिनल वर्सेस रियल एक्सचेंज रेट. सो वी हैव बीन डिस्कसिंग सो फार अबाउट nominal exchange rate, which refers to the rate at which a person can trade the currency of one country for a currency or for other. Nominal rate for any country, there are many nominal exchange rates because its currency can be used to purchase many foreign currencies. मतलब डॉलर से आप इंडियन रुपीज़ से आप डॉलर खरीद सकते हो, यूरो खरीद सकते हो, पाउंड के बाद येन खरीद सकते हो. While studying exchange rate changes, economists make use of these indexes that averages that these many exchange rates. So exchange rate index turns these many exchange rates into a single measure for the international value of currency. So nominal exchange rate can be used to find the domestic price of the goods. Nominal exchange rate, NER. However, trade flows are not affected by nominal exchange rates, but instead real exchange rate. The person or firm buying another currency is interested in what can be bought with it. The real exchange rate is the rate at which person can trade the goods or service from one country of goods service to another. It describes how many of a good or service in one country can be traded for one of that good or service in foreign country. So a country's real exchange rate is the key determinant of its net export of goods and services. For calculating real exchange rate, in case of trade in a single good, we must first use the nominal exchange rate to convert price of a common currency. The real exchange rate between two countries is the product of the nominal exchange rate and the ratio of prices between two countries. कैसा कैलकुलेट होता है वो देखते हैं. So real exchange rate equals to nominal exchange rate multiplied by domestic price divided by foreign price. समझ रहे हैं? ये इसी को उन्होंने वापस ये किया है, नॉमिनल एक्सचेंज रेट मल्टीप्लाइड बाई ये अलग पार्ट किया है. सो द रियल एक्सचेंज रेट डिपेंड्स ऑन द नॉमिनल एक्सचेंज रेट, मतलब ये इसके ऊपर डिपेंडेंट है. इन द प्राइस ऑफ द गुड्स एंड सर्विस इन टू कंट्रीज मेजर्ड इन लोकल करेंसी. सो ये सेम करेंसी में होना चाहिए. वेदर studying the economy as a whole, we use price indices which measures the price of a basket of goods and services. Real exchange rates then can be index के basis पे. Real exchange rate equals to nominal exchange rate multiplied by domestic price index divided by foreign price index. Another exchange rate concept, the real effective exchange rate, REER, is the nominal effective exchange rate, a measure of the value of a domestic currency against a weighted average of various foreign currency, divided by the price deflector or index of cost. So an increase in REER implies that exports become more expensive and imports became cheaper. Therefore, an increase in REER indicates a loss in trade competitiveness. Then comes the foreign exchange market. The foreign exchange participants mainly are commercial banks executing orders from exporter, importers, investment institutions, insurance and retirement funds, hedgers, and private investors. Commercial banks also perform trading operations in their own interest and at their own expense. Daily turnover of the largest bank often exceeds several billions of the US dollars and also make their main profit by speculating operations with currency. Currency के ऊपर स्पेकुलेशन करते हैं. स्पेकुलेशन यानी जस्ट इनडायरेक्टली बोले तो सट्टा जैसा. लॉटरी, गैम्बलिंग, स्पेकुलेशन. स्पेकुलेट कर रहे हैं यानी आप वो बोल रहे हैं कि आज मैंने से 100 बिलियन का डॉलर खरीदा है और मैं स्पेकुलेट कर रहा हूँ कि वो बढ़ने वाला है, 102 होने वाला है, तो मेरे ये मैं स्पेकुलेट कर रहा हूँ, तो जब मैं बेचूंगा 102 में तो मेरे को 2 बिलियन का गेन होगा. Then comes brokerage houses are also playing an important role as contractor between large number of banks, funds, commission houses, dealing centers, etc. Commercial banks and brokerage houses do not execute currency exchange operations at prices set by other active players, but come out with their own prices as well, actually influencing the price formation process and the market life. That is why they are also called market makers. In contrast to the above, passive players cannot set their own quotations and make traders at quotations offered by active market players. Passive market players normally pursue the following aim: making payment of import-export contracts, foreign industrial investment, the opening of branches abroad, or the creation of ventures, tourism, speculation on rate differences, hedging of currency risk, that is insurance against loss in case of favorable price change, etc. सो हेजिंग प्राइमरली मीन्स कि आप जो कि कुछ लॉस होने वाला है उसके अगेंस्ट आप कुछ प्रोटेक्शन कर रहे हो, इंश्योरेंस ले रहे हो. Then we have in a foreign exchange market there are two types of transactions. First, current transactions which are carried out in the spot market, spot माने मतलब immediate वाला market, and it exchange and the exchange involves immediate delivery. Immediately आप खरीद रहे हो, immediately बेच रहे हो. Then comes second one, future markets, where contracts are agreed upon to buy or sell currencies for future deliveries, which are carried out in forward and future markets. फ्यूचर ट्रांजेक्शन यानी 3 महीने बाद के लिए आज कॉन्ट्रैक्ट कर रहे हैं, या 6 महीने बाद के लिए, या 1 ईयर बाद के लिए, ऐसा. फिर आता है exchange rate prevailing for spot transaction, spot trading, for which settlement by and large takes 2 days, are called spot exchange rates. मतलब जो immediate वाला. The exchange rate quoted in foreign exchange transactions that specify a future trade are called forward exchange rates. मतलब ये फ्यूचर के लिए जो रेट है उसको फॉरवर्ड एक्सचेंज रेट बोलते हैं, जो इमीडिएट चल रहा है अभी उसको बोलते हैं स्पॉट. सो द करेंसी फॉरवर्ड कॉन्ट्रैक्ट्स are quoted just like spot rates. However, the actual delivery of currency takes place at the specified time in future. When a party agrees to sell euro for dollars on a future date at the forward rate agreed upon, he has sold euro forwards and bought dollars forward. मतलब जो फ्यूचर वाला रेट है तो एक जगह खरीद रहा है एक जगह बेच रहा है, ऐसा. तो फ्यूचर वाली बात है. A forward premium is said to occur when the foreign exchange rate is more than for spot exchange rate. ऑन द कॉन्ट्रेरी, मतलब ये पहला वाला केस बताता हूँ. मतलब आज अपना रेट है 100 रुपीज़ जो भी करेंसी XYZ, और आगे वाला ये 120, और दूसरे केस में यहाँ पे 100, सेकंड केस में 80. जस्ट अ मिनट, आई विल ट्राई टू zoom it in and write here. 80, सेकंड केस में 100 है, 120. तो ये फर्स्ट केस क्या बता रहे हैं कि फर्स्ट फॉरवर्ड प्रीमियम इज सेट टू ऑकर व्हेन फॉरेन एक्सचेंज रेट इज मोर देन स्पॉट. मतलब ये वाला फर्स्ट है, फॉरेन में ज़्यादा है स्पॉट से. ऑन द कॉन्ट्ररी, द फॉरेन ट्रेड इज कोटेड एट लेट लोअर रेट देन द स्पॉट, देन देयर इज द फॉरवर्ड डिस्काउंट. ये डिस्काउंट वाली बात है सेकंड वाले केस में, डिस्काउंट. फर्स्ट में प्रीमियम. While the foreign exchange rate can involve any two currencies, most transactions involves exchange of foreign currency for the US dollars, even it is not a national currency of either the importer or exporter. मतलब ये बोल रहे मेजरली सब डॉलर्स में ही ट्रांजेक्शन होता है, यूएस डॉलर्स में, इवन इफ आपके दोनों बायर और सेलर की करेंसी अलग है. So on account of its critical role in the forex market, the dollar is often called a vehicle economy. मतलब इसके रूट होता है उसके थ्रू हर एक ट्रांजेक्शन, इसलिए उसको बोलते हैं व्हीकल. व्हीकल इज व्हीकल का नॉर्मल यूज क्या है कि एक प्लेस से दूसरे प्लेस को लेके जाना, तो वैसे ही एक ट्रांजेक्शन को या एक कंट्री से दूसरे कंट्री में कंप्लीट करने के लिए यूएस डॉलर्स का हम हेल्प लेते हैं. काइंडली बेयर में इफ आपको एग्जांपल अच्छा नहीं लगा तो. Then we have determination of nominal exchange rates. As you already know, the key framework for analyzing prices is the operation of forces of supply and demand in the market. Usually, the supply of and demand for foreign market in the domestic foreign market exchange rate determines the external value of the domestic currency, or in other words, a country's exchange rate. Individual institutions and government participate in the foreign exchange rate market for a number of reasons. On the demand side, people desire foreign currency to purchase goods and service, for unilateral transfer such as gift, award, grants, donation, endowments, to make investment income base abroad, to purchase financial assets, stock, bonds abroad, to open a foreign account, to acquire direct ownership of real capital, for speculations and hedging activities related to risk taking or risk avoidance activity. The participants on the supply side operates for similar reasons. Thus, as the supply of foreign currency to the home currency results from foreign purchase of home export, unilateral transfer to home currency, investment income payments, foreign direct investment and portfolio investment, placement of bank deposit speculations. We shall now look into how the foreign exchange market work. Similar to any standard market, the exchange market also faces a downward sloping demand curve and a upward sloping supply curve. So this is determination of nominal exchange rate. So the equilibrium rate of exchange is determined by the interaction of supply and equilibrium point है. The demand curve D dollar, ये demand curve है. Demand is supply. अब देख लेना. Then comes 4.7 changes in exchange rate. So changes in exchange rate portray depreciation or appreciation of one currency. The term rupees currency appreciation and currency depreciation describes the movement of the exchange rate. Currency appreciates when the value increases with respect to the value of another currency or basket of currency. On the contrary, currency depreciates when the value falls with respect to the value of another currency or basket of currency. We shall try to understand with the following example. For example, the rupee dollar exchange rate in the month of Jan was $1 equals to rupees 70, and we find in the month of April it is $1 equals to 75. What does this indicate? So in April you will have to exchange a greater amount for Indian rupees to get the same value of $1. So as such, the value of the Indian rupees has gone down. कम हो रहा है ना, 70 मतलब ज़्यादा पैसे दे रहे मतलब वैल्यू कम हो गया अपना. और इंडियन रुपीज हैज़ depreciated. Rupee depreciation here means that the rupee has become less valuable with respect to US dollar. So USD 1 से रुपीज़ फर्स्ट 70 फिर हुआ 75, तो ज़्यादा पैसा लग रहा है मतलब इसका ये डिप्रिशिएट हुआ है रुपीज़, और ये इस रिवर्स टर्म में इसको अप्रिशिएट बोलते हैं. So simultaneously, if you look at the dollar value of dollar in terms of rupee, you will find that value of US dollars has increased in terms of Indian rupees. So dollars के साइड से देखेंगे तो उसको जहाँ 70 रुपीज़ लग रहे थे खरीदने को 75 लग रहे, तो डॉलर के साइड से वैल्यू बढ़ गया है, पर रुपीज़ के साइड से डिप्रिशिएट हुआ है, तो इसको एप्रिसिएशन बोलते हैं, इसको डिप्रिसिएशन बोलते हैं. So on $1 will now fetch 75 rupees instead of 70. So this is called appreciation of the US dollars. You might be observed that one currency depreciates against another, the second currency must simultaneously appreciate against the first. So to put it more clearly, home currency appreciations, which is the same as foreign currency appreciation, takes place when there is increase in the home currency price of the foreign currency, or alternately a decrease in the foreign currency price of the home currency, the home currency thus become relatively less valuable. मतलब अभी लेस वैल्यूबल फर्स्ट वाले केस मतलब वही बता रहा है, रुपीज़ वाला बात कर रहे हैं. सेकेंड, होम करेंसी अप्रिसिएशन, ये डॉलर्स के केस में था, takes place when there is a decrease in the home currency price of foreign currency, or alternatively an increase in the foreign currency price of home currency. The home currency thus becomes relatively more valuable. डॉलर का वैल्यू बढ़ गया है. Under a floating rate system, if for any reason the demand curve for foreign currency shifts to the right, representing increased demand for foreign currency, and supply curves remain unchanged, then the value of exchange of foreign currency will rise and the domestic currency depreciates in value. So this is the example. ये फर्स्ट प्राइस है, सेकंड प्राइस है. सो मार्केट इनिशियली इज इन इक्विलिब्रियम ई, ये फर्स्ट वाला है और ये सेकंड वाला है. एन इंक्रीज इन डोमेस्टिक डिमांड बढ़ गया है, यहाँ पे देख सकते हो. D1 बोलता डिमांड, इंक्रीज डिमांड. An increase in domestic demand for the foreign currency with supply of dollars remain constant, जबकि सप्लाई सेम ही है, सिर्फ डिमांड बढ़ गया है. सो इज रिप्रेजेंटेड बाय राइटवर्ड शिफ्ट इन ऑफ द डिमांड कर्व. द इक्विलिब्रियम एक्सचेंज रेट राइजेस, जो ई से E1 पे गया, फिर एक्सचेंज रेट भी बढ़ गया. दिस इंडिकेट्स दैट more units of domestic currency here in rupees are required to buy 1 unit of foreign currency. सप्लाई उतना ही है, डिमांड बढ़ गया है तो प्राइस बढ़ेगा. बेसिक इकोनॉमिक्स. We shall now examine what happen if there is an increase in supply of dollars in the Indian market. उसका उल्टा है, तो डिमांड उतना ही है, सप्लाई बढ़ गया है. सो ये उल्टा है, यहाँ से यहाँ, ये ओल्ड है, ये न्यू है, जबकि डिमांड उतना है तो फिर फॉल होगा. So an increase in the supply of foreign exchange shifts the supply curve to the right, S1, and consequences the exchange rate declines to E1. ये E से E1 नीचे आया, तो इससे क्या होगा? It means that lesser unit of domestic currency here in rupees are required to buy 1 unit of foreign currency, that is dollars, and the domestic currency rupees has appreciated. So as we are aware, in an open economy, firm and households use exchange rate to translate foreign prices in terms of domestic currency. Exchange rate also permits us to compare the price of goods and services produced in different countries. Further, import or export prices could be expressed in terms of the same currency in trading contract. This is the reason why exchange rate movements can affect international trade flow. फिर आता है devaluation, that is revaluation, or depreciation, that is appreciation. Devaluation मतलब is the deliberate downward adjustment in the value of country's currency value to another country's currency or group of currency or standard. It is a monetary policy tool used by countries that have fixed exchange rate system or nearly fixed exchange rate regime, and involves a discrete official reduction in the otherwise fixed par value of currency. मान लो जहाँ पे अभी जो अभी दिखा है हमने, इंडिया का वैल्यू 75 है अगेंस्ट डॉलर. तो गवर्नमेंट एग्जाम्पल है कि इसमें, सो गवर्नमेंट विल इंटरवेन एंड ट्राई टू फिक्स इट टू 73. दिस इज कॉल्ड डीवैल्यू कर रहा है, जबकि उसका एक्चुअल वैल्यू 73. सो द मॉनेटरी अथॉरिटी formally sets a new price rate with respect to a foreign reference currency or basket of currency. In contrast, depreciation is the decrease in currency's value relative to the major currency benchmark due to market force of demand and supply under a floating exchange rate, and does not involve any government or central bank policy actions. Revaluation is opposite of devaluation. Devalue कम का, revaluation में बढ़ा के देगा. Refers to a discrete official increase in or of the price at war of a nation's currency. Appreciation, on the other hand, is an increase in currency value relative to the other currency due to market forces of demand and supply under a floating exchange rate, and not due to any government or central bank policy interventions. Impact on exchange rate fluctuations on domestic currencies. The fact that among the macroeconomic variables, exchange rates are perhaps the most closely monitored, analyzed, and manipulated economic measure highlights the overwhelming importance of exchange rate in an economy. The unpredictable of the market caused by exchange rate fluctuations can profoundly determine a country's economic performance. Knowledge about the possible effect of foreign exchange rate fluctuations enables us to understand of the appropriateness of foreign exchange policy, especially in developing countries. In the discussion that follows, we shall examine the impact of exchange rate fluctuations on the real economy. So, the the development in the foreign exchange market affects the domestic economy both directly and indirectly. कैसा है उसके बारे में बताया. The direct impact of the fluctuation in rates is initially felt by economic agents who are directly involved in the international trade or international finance. So fluctuation in the exchange rate have a significant role in determining the nature and the extent of country trade. Fluctuations in the exchange rate affect the economy by changing the relative price of domestically produced and foreign produced goods and services. All else equal or all other things being the remaining the same, an appreciation in current country's currency rises the relative price of its export and lowers the relative price of its import. Appreciate हो रहा है तो. Conversely, depreciation lowers the relative price of country's export and raises the relative price of its import. When the country's currency depreciates, foreigners find that its exports are cheaper and domestic residents find that import from abroad are expensive. And appreciation has opposite effect, that is foreigner pay more for that country's product and domestic consumers pay less for that product. Example, assume that there is devaluation or depreciation of Indian rupees from 65 to 70. A foreigner who spends $10 to buy Indian goods post devaluation can get the goods of rupees 700 instead of 650 prior to depreciation. An importer has to pay for his purchase in foreign currency. Therefore, a resident of India who wants to import goods worth rupees $1 will have to pay rupees 70. ज़्यादा भरना पड़ेगा 65 की जगह पे prior to depreciation. जो पहले 65 के लिए में आ रहा था अब उसको 70 देना पड़ रहा है. Importers will have effect they will have to pay more rupees on importing products. On the contrary, exporters will benefit as exported abroad will fetch dollars which can now be converted to more rupees. तो एक जगह पे फ़ायदा है एक्सपोर्टर को, यहाँ पे नुकसान है. Then comes exchange rate changes affects economic activities in the domestic economy. A depreciation of domestic currency primarily increases the price of foreign goods relative to goods produced in the home currency and diverts spending from foreign goods to domestic goods. Increased demand both for domestic importing competing goods and for exports encourages economic activity and creates output expansion. Overall, the outcome of exchange rate depreciation is a expansionary impact expansion होता है उससे on the economy as a whole at the aggregate level. The positive effect of currency depreciation, however, largely depends on whether the switching of demand has takes place in the right direction and in the right amount, as well on the capacity of home economy to meet the increased demand by supplying more goods. For an economy where goods are significantly high, a depreciated currency would means a lot gain. In addition, if export originate from labor-intensive industries, increase in export price will have positive effect on employment and potentially on wages. एक्सपोर्ट प्राइस बढ़ने से इनको इनकम पैसा ज़्यादा आएगा और वेज रेट में भी इम्पैक्ट आएगा. Depreciation is also likely to add consumer price inflation in the short run directly through its effect on price of imported consumer goods and also due to increased demand for domestic goods. The impact will be greater if the composition of domestic consumption basket consists of more imported goods. ज़्यादा imported रहे तो ज़्यादा impact आएगा. Indirectly, cost push inflation may result through possible escalation in the cost of imported inputs. In such an inflationary situation, the central bank, India में RBI of the country will have no incentive to cut policy rate, as this is likely to increase the burden of all types of borrowers including businesses. The fiscal health of a country whose currency depreciates is likely to be affected with rising export earnings and import payment and consequently impact on current account balance. A widely current account deficit is a danger signal as far as growth prospect of the overall economy is concerned. If export earnings rise faster than the import spending, then करेंसी अकाउंट बैलेंस विल इम्प्रूव, मतलब ज़्यादा एक्सपोर्ट हो रहा है तो ज़्यादा फॉरेन करेंसी आ रहा है, तो ज़्यादा फॉरेन करेंसी आ रहा है, ज़्यादा फॉरेन करेंसी आ रहा है तो ज़्यादा उसका अकाउंट बैलेंस इम्प्रूव होता जाएगा. Companies that have borrowed in foreign exchange through external commercial borrowings (ECBs) but have been careless and did not sufficiently hedge these loans against foreign exchange rates would be negatively impacted, as they would require more domestic currency to repay these loans. A depreciated domestic currency would also increase their debt burden and lower their profit and impact their balance sheets adversely. These would signal investors will be discouraged from investing in such companies. Countries with foreign currency dominated government debts, currency depreciation will increase their interest burden. फॉरेन एक्सचेंज रेट अगर करेंसी डिनोमिनेट हुआ, मतलब सामने वाला ये हुआ ज़्यादा पैसे देना पड़ रहा है, तो हमारा इंटरेस्ट कॉस्ट भी बढ़ गया है एंड कॉज रिस्ट्रेन टू द एक्सचेंजर for repaying and serving foreign debts. Fortunately, India has a small portion of public debt in foreign currency. Exchange rate fluctuations make financial forecasting more difficult for firms, and larger amount will be earmarked for ensuring against foreign exchange rates through hedging. With growth of investment across international boundaries, exchange rates have assumed special significance. Investors who have purchased a foreign asset or the corporations which float for foreign debt will find themselves facing foreign exchange risk. Exchange rate movements have become the single most important factor affecting the value of investment at international level. They are critical to business volumes, profit forecast, investment plans, and investment outcomes. Depreciating currency hits investor sentiments and have radical impact on patterns of international capital flow. Foreign investors are likely to be intensive or highly cautious before investing in a country that has high exchange rate volatility. Foreign capital inflow are characterized characteristically vulnerable when local currency weakens. Therefore, foreign portfolio investment flow in debt and equity as well as foreign direct investment flows are likely to sink. This shoots up capital account deficit, affecting the local fiscal health. To reduce the fiscal deficit at the end of 2022, Russia and India had agreed to switch to trade settlement in their national currency. क्यों, तो इससे फॉरेन रिस्क कम होता है. अभी करंटली डॉलर्स में सेटल कर रहे हैं तो डॉलर का एक्सचेंज रेट का इम्पैक्ट हो रहा था, पर अगर हम उनके ही अदर दैन डॉलर में ट्रेड करेंगे तो इम्पैक्ट थोड़ा कम होगा, मे बी इन इंडियन रुपीज़ और डॉलर्स. ओवर द पास्ट फ्यू ईयर्स, ट्रेड टर्नओवर बिटवीन मॉस्को एंड न्यू दिल्ली हैज़ grown significantly and in both intend to increase their volume during 2023. Meanwhile, Russian export to India significantly exceed Indian import from this country when the Indian rupee has significantly dipped against US dollars and the Russian ruble. We look at how such variations can be overcome, setting in motion mechanism for additional mutual settlement schemes with countries whose currency may not be strong as ruble, and look at the 2023 prospect for Russia-India trade barrier settlement. In mid-November last year, India announced plans to double the volume of trade with Russia, noting that the transition to settlement in national currencies would be an additional incentive for this. In late autumn, the Indian authorities allowed the use of rupee in international trade settlements. तो पहले डॉलर्स में हो रहा था, तो अब इंडियन करेंसी में हो रहा है. इंडिया के लिए अच्छी बात है. An appreciation of currency or a strong currency or possibly a overvalued currency makes the domestic currency more valuable and therefore can be exchanged for a larger amount of foreign currency. An appreciation will have the following consequences on real economy. So first, an appreciation of currency raises the price of export and therefore the quantity of export would fall. Since import becomes cheaper, we may expect an increase in the quantity of import. Combining these two effects together, the domestic aggregate demand will fall and therefore economic growth is likely to be negatively impacted. Second, the outcome of appreciation also depends on the stage of the business cycle as well. If appreciation sets in during the recessionary phase, the result would be further fall in aggregate demand and higher level of unemployment. If the economy is facing a boom, an appreciation of domestic currency would trim down in inflationary pressure and soften the rate of growth of the economy. An appreciation may cause reduction in the level of inflation because imports are cheaper. Lower price of imported capital goods, components, and raw material lead to decrease in cost of production, which reflects on it decrease in prices. Additionally, decrease in aggregate demand tends to lower demand pull inflation. Living standards of people are likely to improve due to availability of cheaper consumer goods. सस्ते होंगे तो फिर ज़्यादा लोग खरीदेंगे और सबका स्टैंडर्ड ऑफ लिविंग अच्छा रहेगा. With increased export prices, the competitiveness of domestic industry is adversely affected, and therefore firms have greater incentive to introduce technological innovations and capital-intensive productions to cut down to remain competitive. Increasing imports and declining exports are liable to cause larger deficit and worsen the current account. However, the impact of appreciation on current account depends upon the elasticity of demand for export and import. Relative inelastic demand for imports and exports may lead to an improvement in the current account position. Higher the price elasticity of demand and for export, greater would be the fall in demand and higher would be fall in the aggregate value of goods. This would adversely affect the current account balance. Loss of competitiveness will be insignificant if currency appreciate is because of strong fundamental of the economy. From the discussion of this unit, we understand that all countries would desire to have steady exchange rates to eliminate the risk and uncertainties associated with the international trade and investment. However, nations may sometimes go for trade-off with weaker exchange rate to stimulate export and aggregate demand, or a stronger exchange rate to fight inflation. Learners may keep themselves well informed on contemporary exchange rate developments and their implications on the economic welfare of countries. So that's it in this video. Thank you. Keep watching, keep learning, and bye bye.